I'm Charlotte McLeod with the Investing News Network, and here today with me is Gerardo Del Real, co-founder of Digest Publishing. Thank you so much for being here online with me today.
Charlotte, thank you so much for having me. I feel like it's been, 700 years since you and I last spoke, and a different world than the last time we chatted.
Yes, definitely. There have been a lot of changes since we talked last. And one of the changes is with what you have going on. Digest Publishing is a new venture for you. So maybe you can start by telling me what that is all about.
Absolutely. So as everyone knows, Nick Hodge and Nick Hodge actually was the founder of the Outsider Club over at Angel Publishing. And so I had the good fortune of writing two premium publications there for nearly 5 years. And, we got to a point with the business where we just felt, our approach has always been a transparent one that values integrity. And, we're family people before anything. And so we thought that the best way to continue to honor that integrity and maintain that transparency was to launch our own venture. And so, our only disappointment was that we weren't allowed the opportunity, despite multiple attempts, to reach out to subscribers, which, we hold them near and dear. They've enabled us to do what we love to do, which is bring research and insights to people. But it's been nice to see the response and how many people have found us. And so, yeah, Nick Hodge is now the CEO and co-founder of Digest Publishing. And him and I, you can expect us to continue to deliver the same insights, the same research that we have for years on end, right? Our publications are live. And no, we're excited. It's been an absolute blast setting everything up.
Okay, well, that's great to hear. Nice to hear you have something new going on. I think that the way we should start today is by talking probably about the gold price. We're about a week away from the US election. There's a lot of uncertainty in the market. What are the factors you see influencing gold right now? And especially maybe if you could talk about the election and how that could play in.
The Hunger Games, as I call it. Yes, the Hunger Games here in about 7 to 8 days, right? No, look, all jokes aside, we've seen a consolidation in the space, both, with the gold price pulling back beneath that $2,000 level and with the juniors. And frankly, the juniors needed a consolidation. We saw the initial rush of capital into the space once gold broke that $2,000 level. And psychologically, I think everyone just expected and hoped for a continuation of that ascension in price. And that's not the way that bull markets work. There's always a pullback, right? And so I actually think this pullback is healthy. I think if we take a step back and we focus away from the Hunger Games, the election, regardless of who wins, whether it's Mr. Trump or whether it's Mr. Biden, the one thing you can probably count on is stimulus, more counterfeiting of the currency, right? And then if we take another step back and we look around the world and we look at Europe and we look at what's going on there, you can count on more stimulus from that part of the world. And so it's kind of a fiat race to the bottom, which makes me incredibly confident about the gold space and the gold price. And I see this pullback as a healthy opportunity for people that felt like they missed that initial run up to maybe start doing some homework and some due diligence and get in and take advantage of the recent pullback, because I don't think it'll last for more than another 4 to 6 weeks.
Okay, and yeah, that's something that I've been hearing quite a few people say is the short term may be uncertain, but in the long term, it's looking much more certain for gold at least. When we spoke last, which as you mentioned does feel like it was a really long time ago, you mentioned something that I think really rings true today. You said we could see a much higher gold price, 3,000, 5,000, not out of the question, but it will come with a lot of turmoil. And I think certainly we've seen that this year. So, what's the price potential looking for you right now? Would you stand by that statement?
I absolutely would. I think that, even the people that I hate to agree with, the Goldman Sachs of the world, are calling for 2,300 gold in 2021. And I think that we can expect continued volatility, socially, monetarily, fiscally. There's just so many factors that are lining up right now that, sure, it may be good for the gold price because of the volatility, because capital will go where it's treated best. And every day, governments around the world continue to demonstrate that governments aren't going to treat most capital best. And so capital will flee and look for safe harbor. I think gold can provide a bit of that. But again, the offset to that is that I think we're in for an incredibly volatile time in just in general.
As you mentioned, we focus a lot on the US, but this is something that's really going on worldwide. Is that something we've seen before where there's so much money printing going on at a global level?
We haven't seen it the way with the velocity that we're seeing it now, right? And I think that's important. I mean, we can look at past pandemics and World War II and the Great Depression, and we can look at all that and study it, but it's never happened with the velocity that it's happening now. We're talking $3 trillion stimulus packages as if trillions are the new billions, with zero regard for how we're ever going to repay that. And that's just here in the US. In Europe, they're having a second wave. Whether you believe in COVID-19 or not, the lockdowns are real. They're being imposed, they're being mandated. People are being forced to stay home. And this second wave of lockdowns and shutdowns is going to have a generational impact on economies for generations, right? And so I don't know that there's a point in history where we've seen every government around the world racing to counterfeit money in order to keep things afloat. And I think it speaks to the volatility that's coming.
And are there any factors that we may be missing when we look at the gold picture? We've been talking about the election, coronavirus. Is there anything flying under the radar that people should be paying attention to?
Absolutely. I remember being in New Orleans maybe 4 years ago, and I was on a panel back then, and we talked about the one outlier that I saw that could affect gold's run higher. And I've said, and I've continued to say that in order for gold to continue higher to that $3,000 to $5,000 price target that I think is very possible, it would have to do so alongside a rising dollar and possibly alongside a rising Bitcoin. And it was counterintuitive in 2016 because it was a different market, a different space. But if you look now, Bitcoin is creeping back up. Gold is at the $1,900 level. And the one asset class that hasn't performed yet is the dollar. And so again, why would I be bullish the dollar in the midterm if I think that we're going to continue to have these trillion-dollar deficits? Because the world doesn't work according to what the US says or does. It's a global capital system, right? And so when I look around, I've said for years, the dollar is the cleanest dirty shirt in the laundry basket, right? In the currency laundry basket. And I do see a scenario where Europe is so fragile that capital escapes and flees and maybe does rush into the dollar. I do think there's a possibility for a short-term reaction where gold price pulls back. But then I see, again, the dollar, even Bitcoin and gold holding hands and headed higher before eventually the dollar meets its maker as well, right? It's a fiat currency, and we know that it doesn't have sustainable purchasing power. But in the next year or two, I think people could get thrown for a loop, and that could be the surprise that catches people off guard.
Okay, that makes sense to me. I do want to take you back to what investors should do during this time. You were mentioning at first that this is perhaps a time to be building positions. Anything more you would say on that?
I think it's critical right now to invest or speculate in juniors that have catalysts outside and independent of a rising gold price. If we are right that gold heads higher, we'll all look very smart because the equities will rise higher as well, right? That part is easy. The tricky part right now is doing your due diligence and making sure that the companies that you're allocating new capital towards have near-term catalysts. And that can be a favorable permitting decision, that could be drill results, that could be M&A, but you can't just allocate capital right now hoping that the gold price rises. Because if you do, and it doesn't, you will have less capital after you're wrong about that. And so I'm looking for gold companies and copper gold companies that are drilling, that are due to deliver results here soon, and frankly, that have been overlooked by the market by some of the capital that likes the more promotional stories, which there's nothing wrong with it. We're all here to make a dollar, but you got to pick your preference. And I prefer companies that actually have material catalysts, independent of just promotion and just a higher gold price.
Right. And do you have any other advice for investors who may not be used to investing in this type of environment where the prices are higher? I know for myself, definitely, I feel a little bit nervous seeing prices so high.
It's interesting to me. Every cycle, there's the talk of projects with optionality, and you hear that word, which means if gold keeps going higher, this company should be worth this much more. And the interesting part about that to me, that equation, is that you don't have to pick projects that only work at a higher gold price. There's so many great projects out there that work at much lower prices. Those are the projects to me that deserve your capital. And that's something that, Nick Hodge and I have prided ourselves in doing research and providing those insights. And, if you want free access to information, resourcestockdigest.com, right? That is free. It's a sponsor-based site. It's there for you. You can listen to opinions from CEOs and thought leaders in the space. And then if you want further due diligence, you can click on the publications tab, and our publications are up and running, and we'll have the new site soon for the new company. But in the meantime, that's an excellent resource for free information and diligence in the space. So yeah, don't pick the projects that work miraculously well if the gold price goes higher. Pick the ones that work at lower gold prices, and guess what? If the price goes higher, those projects will work even better, right?
Right. And I was going to ask you if your strategy changes at all in a market like this. And it sounds like no, really, you're still following the same strategies that worked in a bear market, even though now we're in a better environment.
I would add one point to that. I am more aggressive about my hold times because I am more confident in the macro scenario for the gold space, right? And so where I may have taken profits quicker on a 40 or 50% move, I don't mind now a 25% retrace because I'm so confident in what comes next. And so, this is the kind of cycle where you really don't get into it for double or even triple digit gains. If you play it well enough and you have sustainability, you can walk out of this 2 or 3, 4 years down the road with many four digit gains. And that's really why we speculate in the space. It's why we go through the pain of the bear market that we just all went through, right? And so just be cautious taking profits too soon, because this is the kind of cycle that can create that generational wealth.
All right. And I know you're really focused on the juniors, but I think I have to ask about the mid tiers, the larger producers. Is there a case for looking at those companies?
Absolutely, absolutely. There are different risk parameters for everybody, and so I get subscribers that write in saying, Gerardo, it's great that you have your focus on earlier stage juniors, explorers, developers, but what about the producers? And I completely understand the need for people to diversify, and you should, by finding producers that have clean balance sheets. And a higher gold price has helped that, right? It's easier now. And there's even now a few royalty companies, one in particular that I really like, that's paying a dividend. And so this is a company with a $600 to $700 million market cap. Some of the smartest money in the space is behind it. It pays you a dividend, and you don't have the risk of producing mines. They have multiple assets, cash flow generating assets in multiple jurisdictions. So that's something that I think subscribers will see from me here in the next month or so. I do want to introduce a little bit of that because I realize it's important for people's portfolio. I have a higher, I gravitate more towards the higher risk, higher reward plays, but it's important to hedge that a bit. And I realize that.
Okay, perfect. Now, I was going to ask you about other commodities you're interested other than gold. You mentioned copper. Could you make the case for copper for us? And if there's anything else that you have on your mind, it would be great to hear about that as well.
No, copper, I'm almost as excited about copper as I am about gold, to be frank with you. And I've really made it a focus the past several quarters to identify quality gold copper plays, right? And there's several out there that are still very undervalued. So I think if you look at copper, Nick Hodge had a term that he coined about 4 or 5 years ago, and he said the electrification of everything is happening, right? And look, we're on a Zoom meeting here with a computer. I have my phone. There's an electric car in the garage. Infrastructure. There's a rush around the world, again, looking globally, for these Green New Deals. Whether you agree with the policy or not, the shift is changing, and we are shifting into a carbon neutral society. That's just the trend moving forward. You can't do that without massive amounts of copper. And I'd also like to make a good case for lithium as well. I think lithium has been, just decimated over the past 3 or 4 years. And I think we're at a bottom there as well. I think there's a good case to be made for quality lithium plays out there.
Okay, that is great. I think the next question to ask would be, are there any companies you would mention that you're looking at right now or success stories that you would want to talk about from this year?
You know, one success story that I actually am still buying is a company called Magna Gold. And I actually think we spoke about it last year. It was trading around the 25-cent level. I helped finance it at the 10-cent level. It's sitting here at the $1.30 level. And people ask me, what's the next Magna Gold? And I joke that it's Magna Gold because it has, sure, it's up 10, 15 fold, but Arturo Bonilla, as the CEO, is so on the case for M&A, producing, expanding, and exploring all simultaneously. And it's all self-funded. So if you're looking for a great gold explorer, gold producer, silver explorer that's on the M&A hunt, Magna Gold is a phenomenal company. Excellent share structure, excellent management team. And I think that that's one of those companies that a few years from now, we can look back and say, it was a great buy at $1.30. 10 cents was great, but we're here at $1.30 now. And I think $1.30 is an excellent entry point.
And interesting, you mentioned the silver exploration side. I know our audience has an interest in silver and especially the smaller companies there as well. So that's great to hear.
Absolutely. And then I'll mention two other ones really quick that I've been keen on for quite some time. One is Chakana Copper. They are onto what I believe is a very significant discovery at their Soledad project in Peru. And so rigs are turning. We're expecting assays every 2 weeks for the next 2 or 3 months. The share price has pulled back with the rest of the sector. I think it provides an excellent entry point. Ticker symbol PERU on the venture exchange. And then the last one is Almaden Minerals. I think the last time we talked about Almaden Minerals, they had pulled back to the 35-40 cent level. And here it is trading back up to about $1.25 Canadian. And it's on the verge, I believe, of being issued its final permit to be able to begin to have negotiations with potential suitors about selling its Ixtaca project in Mexico. And I think at this price point, it's, again, an excellent level.
Okay, perfect. I have one small follow-up question, which you're mentioning these companies that have results coming in, they're doing all this work. In general, would you say that the mining industry has been able to move on fairly well from COVID-19? It seems like lots of companies are up and running totally fine.
I think we'll know the answer to that when we start seeing drill results continue on, right? I think they've done an amazing job mining the market and raising capital and replenishing their balance sheets across the board, right? Whether you're a prospect generator, a copper company, a silver company, a gold company, the one thing you've seen is the ability for these companies to tap the equity markets and raise money. Now I want to see what they do with that money. And I want to see if they're able to deliver shareholders what shareholders wrote a check for, which is results. We want discoveries. I think we're in a great discovery cycle. But it is time now in the space to separate the promotional stories. Nothing wrong with promotion, but it's time to back some of that up with results. And we're at the point where the rubber hits the road and we'll know soon.
Okay, well, any final points as we wrap up for investors to watch as we head into Q4 and toward the end of the year?
I think that we're near a bottom in the junior resource space in the context of this new bull market, right? We shot up here the last few months, and now we pulled back here, retracement of about 30 to 35%. I'm getting letters, getting emails. People are nervous. That's usually a classic sign that we're at the bottom for this pullback. And I think the next leg up is definitely higher. And I think 2021 is going to be an exceptionally exciting year for copper, for gold, for lithium even. And if you can pick a company or two, you might do pretty well for yourself.
Okay, well, perfect. I think we can leave it there. Thank you so much, as always, for coming on to talk with me.
Thank you for having me. It's a pleasure as always, Charlotte. Thank you.
Great. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gerardo Del Real.